if someone handed you 1 million Kenyan shillings, or a check, someone gave me 1 million Kenyan shillings check, this is a real check, today, and tell me, this is 1 million, make this money multiply, what will you do? So this is an episode of the 2025 blueprint for investing 1 million Kenyan shillings intelligently and combining safety, growth, and ownership. So let's build a plan that the future you will thank you for it. So now, before we start investing, let's talk about 1 million. Why is 1 million a game changer? So at 1 million, when you're investing at 1 million Kenyan shillings, money stops being an extra. It starts being leverage. You can begin owning assets and not just investing in them. You can take informed risks, you can grow real equity and build long-term income streams. So we'll start by doing a benchmark and I will explain why. So before we allocate money into different investment vehicles, which we shall be talking about, these ones, let us see what have been the top performing money market funds right now. I'll explain why we are doing this one. So the Gulf Cup Money Market Fund has been performing at 12.9%. Saiton Money Market Fund at 12.58. That is the gross. And then net is 10.69. Gulf is 12.90 gross, but net is 10.97. Of course, after tax. Etika Money Market Fund has been performing at 11.60% gross and 9.86% net. Knowing these money market funds will help us calibrate our expectations and spot better versus average funds later on. And so let's start allocating the 1 million investment and have balanced between growth, balanced and then growth-oriented allocation. So at the end of our investment, our portfolio will look like this. So let's start. So I will allocate 20% of 1 million in a money market fund. 20% of 1 million is 200,000. I'm going to mark that here so you guys can follow. So 20% of 1 million is 200,000, and I'm putting that in a money market fund. Why? We have always said that money market funds, we invest there because of liquidity, and which is the ability of us being able to get that money faster. I will put another 20%, which is again 200,000, in treasury bills and bonds. And the purpose of this, or the strategy behind this, is because I want medium-term fixed income with staggered maturities spread over a long period of time. And then I will put 15% of 1 million, which is 150,000, in real estate. And this one I can put it in REITs, real estate investment trusts. Why am I putting this money here? The strategy behind it that real estate exposure with the lower barrier entry. Then I will put 10%, which is 100,000, in a SACCO. SACCO. Why? Because SACCOs enable me to get possible credit and at a very lower interest. For information, the interest for SACCOs is always lower and normally on a reducing balance and much, much lower as compared to banks or any other lending institutions. So this is my allocation, and I'm going to put it on the screen so that you can have a look at it. We have done 20% in a money market fund, 200,000. Then we have done 20% again in bills and bonds, 200,000. We have done 15%, which is 150,000, in SACCOs. Then we have done 10% in SACCOs. Then we are going to do 15% in venture or business or seed. Then we shall allocate 10% again in skills or for digital capacity. So let's continue. So I've said we are doing 15% again, which is 150,000 in a business, and 10%, 100,000 in skills or capacity building, and then I'll do another 10%, which is reserved for opportunistic capital. This stands for deals, opportunities, buffer, or any fresh ideas that I might get sometimes later on. What are the explanations or the rationale behind the allocations that we have done? Remember, we said 20% in a money market funds. Why? Because money market funds allow you and me quick access. They allow me lower risk buffer, and then they pay on a daily yield. Of course, that money is compounded, and then you are given at the end of a week or the end of the month, depending with the terms of that money market fund. What's the reason behind treasury bills or bonds? 20%, because this 20% will provide stability and yield predictability across the 91, 182, and 364 days under which I'm investing that money. The 15% in rates, the reason behind is that to give me exposure to property without needing to buy land. When investing in real estate investment trust funds, you don't need to buy land. Then you have got SACCOs, the 10%. This is capital or possible dividends at the end of financial year, and internal finance leverage whenever I want to take credit to do a particular project. Then we talked about 10%, 15% in business, and I'll do this in a business, in a validated business that has shown demand and potential to scale up. Then I'll do 10% in skills or capacity development. I've always said that skills and personal development have got the highest return on investment over time, so that you become more valuable, you become more knowledgeable, and you have a lot of skills over time. Then the last 10%, this is for flexibility to pounce on deals or high growth opportunities when they come across. Still, this 10%, I can still plunge it in a money market fund, or I can still plunge it in just in a money market fund, so that because of liquidity, so that whenever I want to get that money, I can always get it back. So just a recap, we've said that 20% in money market funds, 20% in bills, 15 in rates, 10% in SACCO, 15 in business, 10 in skills and capacity building, and then the last 10% in as opportunistic capital. Let's look at how do we select specific products, those that we have talked about. Money market funds. How do I select money market funds? I compare the net returns, not just gross. Remember, I talked about net and gross. That's why I told you that we are going to go through them. So for money market funds, I compare the net returns, not gross. I check the fund size and the manager reputation and the liquidity. Then I use recent performance plus stability over many periods of month, not just 1 month. For treasury bills and bonds, this is my criteria. I use a CDS account or a bank portal to check the performance. Then I bid in a ladder style. I'll explain that in another video. Then I reinvest the maturing amount so that I don't take it back, but I plow it back into the investment. For real estate funds, I make sure that the fund that I settle on is licensed and regulated by Capital Markets Authority. Then I have to check that the projects that it's working on are known and they have a track record. Then finally, I also check the dividend history that that particular fund has been paying. For SACCOs, I use the following criteria. I have to make sure that transparency and good governance, then has got a track record of paying dividends, then it has got trust and accountability. It has demonstrated trust and accountability. For business ideas, the 10, 15%, I have to make sure that the business that we are investing in has got a valid demand. then I have to keep cycles short, 1 to 3 months cycles. Then I have got to make sure that it can scale easily, ability to scale over a short period of time. Then finally, in the skills that I invest in, I have to choose skills that are in demand. Skills in artificial intelligence, skills in digital marketing, skills in data, skills in machine learning. Those ones are highly marketable. Then you can also choose other skills in soft skills like ability to communicate well, ability to present well, ability to sell and negotiate well. These are skills that are always valuable, and the returns on those skills grow over a period of time. Then I document my work and then monetize the skills that I would have learned. Now, there's an important section that I want us to look at. It's known as the timelines. What do you do in a particular, when investing, what do you do after every 3 months? So in month one, this is my activity that I'm going to do in the first month. So in the first month, I'll open or confirm all the required accounts, whether it's money market funds, a CDS, or a REIT platform, real estate investment trust fund. So I open and confirm that I have all the accounts. Then I deposit money into the money market fund, and then I can also do one treasury bill tranche or join a SACCO. So in month one, I'll do those. I'll repeat. In the first month, I open all the required accounts, money market funds, CDS, REITs, and the REIT platform. Then I deposit money into the money market fund. This is done. It's a minutes thing. Then I place one treasury bill tranche. Then I join a SACCO. In the second month, month two, second month, I place treasury bills. Then I allocate the REIT or real estate fund. Similarly, in the second month, I start a business testing using the 50 to 75 rule. Not rule, but using the 50 to 75,000. Remember, we allocated 100,000, so I'll not use all of that amount. So I will use between 50 to 75,000 of the amount of money that we allocated. In the third month, month 3, I will invest in skills, tool or software, the amount that we are allocated. Then I will monitor my performance and reallocate if need be. Then I document the lessons that I've learned. And then if there are any returns, I reinvest those returns back into my investment platform. We could do some tweaks. There are some tweaks that we can do in our investment. And these are the tweaks. If you are conservative, a conservative investor is one who the level of risk is low. So if you are a conservative investor, shift business allocation to REITs or treasury bills so that you don't have an allocation, the 100,000 into business. But if you are an aggressive investor, increase business allocation to 20 to 25%, because at the end of the day, if you have done a very good research in the business, then you know that this business will give you more returns. Another tweak that we will do, if your income is irregular, for example, you are a freelancer, or the rate at which income comes in is not regular, we've said irregular, increase money market fund buffer, because anytime you want to access your money, you can access that money easily when projects are not coming because you are a freelancer. These are the common pitfalls that you might go through during this journey. Pitfall number 1, over concentrating on one asset. I've always said that when investing, remember not to put all your investment in one platform. Pitfall number 2, chasing highest yield blindly. Common pitfall number 3, selling assets prematurely for liquidity. Remember, investing is a long-term game. You have to be in the game for long for you to realize returns. Number 4, ignoring fees, tax, and withdrawal restrictions, because this will affect the amount of returns that you get. And then pitfall number 5, under investing in your own capacity. betting on yourself, but in a very small capacity. Now, before we conclude, there's mindset and identity upgrade that you need to understand. This will be essential for you when investing. The first one is that money doesn't make you, you are the one who makes money. That's a mindset shift that will change how you perceive the investment journey. Number two, mindset shift. At 1 million, you shift from an investor to becoming an owner. Then, number three, you need discipline, you need systems, you need accountability, and you need a vision. As we conclude, understand that at 1 million shillings, this is not just a number. This is an amount of money that is able to build a strong investment portfolio for you. It's a portal. It's an investment asset. So follow this allocation, reevaluate quarterly, and reinvest the return that you get and grow over time. We've done a video on how to invest 2 million, and I will leave it in the link for you to have a look at it. So don't just invest your money, invest in your vision, invest in your ability and in your capacity to grow, to become a better person, to become a person who can manage that investment, and a person who can grow and be in a region where you can work on yourself to even get much more investment than what we have invested in. So that's our investment portfolio. It might look like this, or we might make some tweaks to have a different approach. So thank you for watching, and until next time, stay tuned. Bye bye for now.